Chris, the interesting part about real estate right now is we've been focused so much on what has been a red-hot residential, single-family, home builder type trade. Where exactly then do investors look when they're looking outside of there for where the potential growth market is for enterprise or business sides of things?
No, Dom, thanks for having me. Great to be here. Again, I think for us and where investors are looking now and you're seeing extreme interest is in need-based assets, assets where demand is consistent. And what you're seeing right now is a market where some of the fundamentals have never been better given the challenge in putting together capital. So supply has been choked off in many markets where demand has remained consistent, and you're seeing great growth in rental revenue. So there are pockets of the market where this has never been a better time to be investing in commercial real estate.
It seems maybe counterintuitive for some of the folks out there, given some of the stresses that we saw in regional banks earlier this year, a lot of the talk about the exposure to things like commercial real estate from many of these small and medium-sized lenders in this country, the threat of rising interest rates to property values and that sort of thing. Amid all of those, where exactly then do you find value in some of those need-based assets? What types of companies, what types of real estate, what are we looking at?
Yeah, I mean, again, our business for 2 decades is focused on demographics, and it's really looking for assets where, again, demand is consistent throughout cycles. So things around education, healthcare. So big focus for our firm around student housing, both off campus and on campus. Big focus on senior housing, medical office, life science, self-storage, data centers, renewable energy. These are assets where you're not trying to time markets, but basically you're seeing right now strong demand, enrollment up at many public universities. You're seeing the 80-plus cohort in population growing in age, needing housing. And at the same time, what's happening is supply has been choked off. So for alternative real estate in these segments, which it's even hard to call it alternative because most large property investors now really are not talking that much about traditional real estate. They're talking about the fundamentals and alternatives. There is great opportunities. And that's what we're so excited about, is just focusing on need-based assets. It's almost like social infrastructure where we can have this consistent demand and offer a great risk-adjusted return to our investors.
All right, Chris, that brings us to what we ask oftentimes for our guests here in this time slot, which is their word of the day. I wonder what your word of the day would be.
I guess I sort of already said it, Dom, but the word of the day is demographics. Demographics, it's resilience, it's stability, it's long-term demand growth. Demographics bodes well for, in our opinion, any investment strategy, whether in equities or real estate. And so that's a big focus of our business, and we think it should be for many as they think about investing over the long haul.
Do you feel worried at all, Chris, that the pandemic has changed the paradigm for higher education, for the need for student housing, because more and more people in the future could maybe, perhaps, go towards virtual learning routes, do their kind of coursework away, maybe at home even, versus going and staying in a dormitory or an apartment attached to a college or university?
It's interesting. This is the sort of second black swan we've been through. First, the global financial crisis, and now this. And, before this period of time, that was the discussion in many meetings with our investors was how was online learning going to affect the university setting? And that was pretty much debunked. I think people recognize that online learning didn't work. Educators didn't like it. Students didn't like it. Parents didn't like it. So for us, it showed the asset class is that much more resilient. And we've never seen fundamentals stronger in the student housing sector in 15 years. So again, we saw that as well as in senior housing. There was a big concern about what was going to happen in senior housing. Well, now the fundamentals, we've had 9 straight quarters of positive absorption in senior housing. We've got better fundamentals in senior housing. We have more occupied units now in senior housing than we had pre-pandemic levels. It turned out to be a very safe place to take care of a loved one. So in many ways, the pandemic highlighted the strength of demographic investing.
All right, and Chris, we just got a few seconds left here. What do you think about the economy in 2024?
Again, I think there are obviously uncertainties. We're starting to see inflation come into check. I think the nice thing about what we're seeing is people are starting to grasp where we are at peak interest rate levels. And whether they come down in second quarter, third quarter, as I've been talking to some of our key LPs, people are starting to very much be comfortable that there's more clarity in the market as to where we've hit from a rate standpoint. So we're seeing a lot of folks now ready to come back into the market. So, our view is we're going to see a positive environment in 2024, should see rates top out, maybe come down a little bit.